Stock market. Having successfully profited from our shorts between late July and mid-August, the blue circles show where we entered our shorts, exited the shorts at the purple circles. That's shown in the model portfolio to the members at myfinancesteacher.org. So since then, the stock market has already risen by over 4%. What's going on? Let's have a look at the details. Zooming out on the S&P 500, it usually follows intermediate cycles that on average last for around half a year. And those intermediate cycles contain several shorter-term daily cycles within them, which usually last each for about a couple of months. And looking back to the pandemic drop, whenever these intermediate cycles rose to 10% to 15% above the 200-day moving average, that's when we saw some risk of a downward momentum down into that intermediate cycle low. More recently, we've seen the stock market around 13% above the 200-day moving average. That's around where we placed our shorts and exited near those recent lows, with the daily cycle lasting for 53 days, pretty close to the average duration, and the intermediate cycle perhaps lasting a little bit shorter than usual at 158 days, still pretty close to an average duration of half a year. Given the strength of the recent decline as well as the more recent bounce, I do see a couple of scenarios for the S&P 500, and at the moment it's a little bit difficult to say which of the scenarios is more likely to play out. So one of the scenarios is that we have already seen the intermediate cycle low back on the 18th of August, meaning that we have started a new intermediate cycle since then. That would imply that stock markets will generally trend higher, although of course with some corrections down into shorter term daily cycles, perhaps test the previous all-time high around 4,800 on S&P 500 before dropping down into the next intermediate cycle low. That's the first scenario, and I think it's pretty likely given the strength of the recent bounce. So I would subjectively give this scenario around 60% chance. And the second scenario here is that the intermediate cycle that started over here in March this year is still ongoing. So we'll just see one more daily cycle within the ongoing intermediate cycle, stretching this intermediate cycle a little bit longer, perhaps 7 months long or so. And within this scenario, we would still see a stronger push down towards that 200-day moving average. And again, given the strength of the recent bounce, relatively close to an average duration of that intermediate cycle, which potentially finished in mid-August, I would give this scenario subjectively 40% chance. Next, let's have a quick look at the market sentiment as well as seasonality, and we'll see that these two also suggest both of these scenarios with a bit of a difference in opinions between these two indicators. Starting with the optimism index, we see that from July into mid-August, the optimism has dropped quite a lot, from over 80 down to low 40s, which is historically enough for an intermediate cycle low. Although the price correction down on the S&P 500 itself, a correction of only around 5.9% down, isn't really a typical correction of an intermediate cycle low. So as I mentioned, there is still a second scenario of a further correction down, but according to the relatively strong drop in the optimism index, we've likely seen that intermediate cycle low a couple of weeks ago. Whereas seasonality, this is the seasonality on the S&P 500, suggests that usually the markets do correct sometime in late August, they do bounce into early September, and a correction down continues into late September, with September usually a red month for the stock markets. So a bit of a difference in opinions between the optimism index and seasonality, hence a couple of scenarios where we continue rallying for another few months in S&P 500 with some corrections down into short-term daily cycles. That is a 60% chance scenario. Or we drop once more into the proper intermediate cycle low closer to this 200-day moving average sometime over the next several weeks. This is a slightly less likely scenario with a 40% chance. For much more frequent and detailed updates on critical commodities as well as the general stock market, follow us at myfinancesteacher.org. Make sure to subscribe to our YouTube channel as well. Give this video a like and have a fantastic Friday.